Hello, this is Victor Santana and welcome to Stock Hunter's video for June 15th. How's everybody doing? Hope everything's going fine. Let's take a quick look and see what's going on in the markets, what has happened, and what we can possibly anticipate coming up next. So let's get right to it. Okay, we're looking at the total U.S. market here, and as you could see last week, it has went as high as the week prior to here, so it's relatively flat here. And if you go into the weekly stochastics here, you could see that it has not broken above in this area. It's pretty much the same equal. And drilling down to the daily, you could see the today's price actions has created a downward move, breaking below the last low, which is this area. So could be the beginning of a downward trend, at least for the short term here. And it's resting on the 18-day, which is typically the borderline of what's going to be considered bullish or bearish. So right now, you could say it's pretty much neutral, with the tendency of being in the bearish camp. Looking at stochastics down here, we are still above the 80, which could still easily reverse and head upward, causing this to be a fake out. As long as it stays under 70.14, then the trend will be being bearish for the short term. We do have a lot of support down in this area. With the 200 and 100, it's going to cross down in this area. So this may potentially come down here and bounce around here. So going into the individual indices here, we're looking at the Dow. As you could see last week, it also hit the even point as well. And digging down deeper, you could see on the stochastics that it is pretty much level or just right at that base here. For 3 weeks it's been up. And on the daily here, this too has broken down the lows price action down here in this area, giving it the bearish trend here. For the short term, it is resting on the 18-day moving average. Now if we look at the NASDAQ did try to break up a little higher and close the positive for the week. But looking at stochastics here, you could see that it has not reached up as high as the other ones in this case, and it's been on the 2 for 5th week here. Going to the daily, looking at the daily view here, it too has broken below its last low in this area, giving it the lower low, and also slightly above the 18-day, but it looked like it, you might say, bounced in this area and went back up slightly higher. Stochastics are above 80, so it could be one of those little fake outs, but we'll just have to wait and see how the rest of this week plays out. Now we're looking at the S&P. S&P also closed up a little positive of last week, still potentially hitting the same resistance level up in this area. Looking at the stochastics here, and you could see that it's not quite as high in terms of the stochastics as the last time on its 4th week. So you could see momentum starting to slow down. And if you go down to the daily here, its last low was in this area, and now it's considered to have broken below it right on the 18th as well. In order to be considered going bullish for now, it would have to go above 96.11. As you can see here, you got the 200 and 100, or excuse me, 245-day simple moving average which will be giving a lot of support in this area if it does decide to touch this area. Stochastics in this area here seems to be a little weaker, pretty close to going under 80. One of the lines did, but the other one is still hanging in there, the 81.10 here. So tomorrow would be, we may get a slight bounce, but on all of them, it's going to be uphill battle to try to break the last highs up in this area. Now let's look at the Russell here, the small caps. Small caps is this week is a lot weaker than it was 2 weeks ago, as you can see here. So a lot of things running on fumes. The stochastics here, if you could look at, is also below when it's on its 4th week. And looking at the daily here, you could see as well that it's way below its last low. Also resting on its 18-day. It's a lot of support down in this area here. Now we're looking at the global. Globally, it did fare a little bit better this week than the week prior. However, it's still hitting the upper resistance up in this area. And looking at the stochastic weekly, it is pretty much in line from the last time here on its 3rd week. However, by looking at the daily chart here, it has also broken its last low below $50.53. It has gone down as low as 50.20. So, and also, and if you notice here, the lines are under 80. So this is could be a fairly good chance of being a downtrend for now. Keep in mind there's going to be a lot of support in this area where the 200, 45, and now you have the Bollinger Band where it most likely may bounce out in this area for the short term. And now some ideas as far as for the short term, the US dollar, UUP, you may want to consider this because its last movement here has broken above its last high and then just put a sell stop at 23.68. As long as it does not break under there, you will not be considered wrong. It is touching above on its Bollinger Band, so it might be getting a reversal next few days. Any pullbacks could be considered a buy opportunity with the potential of going all the way up to this range here, or if the dollar really comes in strong within the next few weeks or the rest of the month, we could actually see it get as high as up in this area, touching the 200 and the 45-day moving average. As you can see, the stochastics are heading upward and on a positive direction in this case. Another idea is shorting the emerging markets. As you can see here, its last high was 21.28 in this area, and today's high was 21.69. So it has created a higher high based on the last one. I would put a stop at 18.87, and any pullbacks could be considered a buy, with the potential of reaching up to this area, which is the $23.43, or as high as up in this area here, the 25.47. Stochastics are headed up higher, and they're above the 20 area. So this may be a good trade for a week or two while the dollar is strong. And that's pretty much it for now. So may the trend be our friend, and let's keep an eye on the markets.